All right, here we are.
Hello, everyone. This is Mimi Mordezai, and I work on the marketing at Savings Oak. Welcome to another edition of The Right Way to HSA. I'm joined by my wonderful teammates, Niraj and Mark, and I'm going to let them take a moment to introduce themselves. Mark, how about you go first?
Hey, sure. This is Mark Siebold. I'm the head of sales at Savings Oak. I've been in the HSA industry going back to 2012. I'm very passionate about health savings accounts. I'm an advocate for them as a way to help employers and their employees manage healthcare expenses, but also save for retirement, putting it alongside the 401k as a retirement vehicle. So happy to be here today.
Thank you.
Awesome. Hi, everyone. My name is Neeraj Mathur. I'm the founder and CEO of Savings Oak. Delighted to be here for another session of How to HSA the Right Way alongside Mark and Mimi, and really looking forward to this topic today that is exciting for all of us to talk about, especially given the tax time that we're headed into.
Thank you. So you kind of clued us off to what we're going to talk about. So today we're going to talk about something that may not be everyone's favorite topic, but it definitely is necessary: taxes and your HSA. And we've got a really informative session on that topic, so definitely stay tuned. So first, let's do a really quick refresher. And Niraj, I'm going to throw the first question at you. Can you explain some of the tax advantages of the HSA, and what's the deadline for employees to contribute?
Oh, awesome. So let's break that apart in two different things. I think from a tax advantages standpoint, health savings accounts are actually one of the most unique accounts in the United States. The contributions that employees make to their HSA account are tax-free. The money that is in their HSA accounts can actually be invested and grow, except for a couple of states, tax-free. And the money can be withdrawn for a qualified medical expense for the duration if somebody has an HSA, all of tax-free. And while typically everyone talks about these three as the triple tax advantage, there's actually a fourth tax advantage that is beneficial to the employers as well as to the employees, that the contributions that come into the HSA through a payroll deferral, meaning an employee participating into the HSA account and having the money taken from their paychecks directly by their employer, are not subject to what's called as the FICA or the payroll taxes. So there is a four tax advantages right off the bat for an HSA. The second part of the question that you asked was like, how long does someone have to be able to participate? So unlike HSAs, unlike FSAs, even I get confused sometimes between those two. Unlike FSAs, for HSAs, you have until the tax day for the year that you're supposed to file for to be able to contribute. So for example, for 2021, a participant has the tax day April 17th, 2022, to be able to make contributions into their health savings account. So you have an extra time. If you haven't maxed out yet, whether you are individual or a family, you have until the tax day this year to be able to put money for your HSA for the last year.
Thank you. So lots of good points, lots of advantages, plus you have until tax day to contribute. So that's good to remember. Mark, this next question is for you. Can you talk a little and what does a person need to keep in mind tax-wise if they've made any withdrawals during the year?
Yeah, the necessary evil of health savings account planning and strategizing is the tax component. Obviously, there's some great tax benefits that Neeraj mentioned, a plethora of them. I hope people are taking advantage of if they can. But there's also the what I call operational piece of this, which is you're going to get documents, from your employer, from your HSA provider, with really critical, important information about your health savings account that you need to retain and or use when you submit your tax return for, in this case, 2021, up until April 17th, as Neeraj pointed out. So there's a couple of important documents there. The first everyone's familiar with, I'm sure most people, at least the W-2 you're going to get from your employer. That will typically come out late January, early February. So you should have that by now. That's going to show you the pay that you had during the year and also some deductions that you had taken out of your paycheck pre-tax. HSA contributions hopefully are one of those. If you are making payroll deferrals into your HSA, which is the best way to make HSA contributions as an employee, because you get all those great tax benefits that Neeraj pointed out, as well as that FICA tax deduction or exemption that you would not get if you did not do payroll deferrals into your HSA, meaning you made what we call after-tax HSA contributions, where you went to your HSA provider and electronically or by check moved money into your HSA. You're not going to get that FICA exemption. So if you can, talk to your employer and have those deferrals run through your payroll to get all the benefits. So that W-2 will show you those HSA contributions during the year. You're going to want to use that when you do your taxes, because you need to report contributions as well as distributions from your HSA. The next two documents are going to be your 1099 SA, which is going to show your distributions from the health savings account. So another important one when you're doing your taxes. Then that third document is the 5498 SA. Now this one's a little bit different in terms of when you're going to receive it. People are used to getting tax documents in late January, early February, up until probably mid-February. The 5498 actually comes out post April 17th. So a lot of times you won't see that until late April or even mid-May sometimes. And the 5498 is showing your contributions for the 2021 plan year. And the reason why you're getting it so late is that it has to come out after April 15th or April 17th this year to allow for you to make contributions up until the tax filing deadline of April 17th. A lot of those documents I mentioned earlier come out in January and February, because those are based off of what happened January through December of 2021. The 5498 or that HSA contribution document has to wait until after you could make that last contribution for last year, which again is April 17th.
Interesting. So there's a couple of 1099, 5498. So, and expect them at different times. So don't expect them all at the same time. So those are the questions I have. Neeraj, do you have any follow-up questions for Mark?
Yeah, I was just, I think this whole tax bit always makes it very interesting for me. And we talked about the benefits, we talked about the FICA. Mark, from your perspective, as you look at many of these small, mid-size businesses and their employees, they're often not aware of the advantages around taxes or just for employers. I mean, particularly the FICA, the payroll tax. Is there one or two things that you recommend to the employers to be actually pushing out to their employees, particularly around the tax benefits, and say why HSAs could be really beneficial to them?
Yeah, and like we've talked about in previous webinars, it's important to give people bite-sized, I call it bite-sized pieces of information. So don't over inundate them at open enrollment, typically in that October, early November timeframe, with a whole bunch of information along with their health plan and their 401k and all the other great benefits that you offer your employees. Rather, spoon feed them information throughout the year. So this time of year, and actually even back to maybe early February, mid-February, is when I would start to give them information to not only touch on the operational components that I mentioned. So the fact that you're going to get that 5498 and it's not going to come until post April 17th. A lot of people don't know that, especially if they're new to an HSA account. So they'll start asking a lot of questions like, where's that document? I haven't found it. It hasn't come yet with everything else. Well, there's a reason for that. So letting employees know that in that, again, early mid-February timeframe, as well as hitting on those other documents and what that 1099 means, what they need to do with it. The fact that they're going to get that W-2 and what's on it. There's the information people are certainly used to, like their wages and federal and state taxes withheld. But there's other information they're not used to, which is the contributions you've made to your HSA account during that past year. So great time to remind them of that. In fact, I would break it up into two communications. The first is, here's these operational components, these documents you're going to get. They're important to you and how you do your taxes. But there's the reminder, and we've hit on this a few times, so apologies if it's redundant, but it's important. There's a reminder that you can still make contributions for last year and max out your HSA account up until that April 17th tax filing deadline. That's something that's relatively unique in terms of other accounts that people may have. So giving them that reminder too, because what I've seen, having worked for a couple of different HSA providers throughout my career, is when you give people information at that time of year, they seem to be more open to it. I don't know if it's because it's the beginning of the year or what the reasons might be, but they seem to be able to or want to consume it. If you look at click-through rates, for example, in emails, I've seen super high click-through rates. And then also in one prior career role, we would gauge contributions to the HSA account and look at contributions for people who received a communication from us, from the HSA provider in February versus those who did not. So a control group, and the people who received communications in that February timeframe had much higher, significantly higher contributions, especially when we reminded them that they can still make prior year contributions to not only max out that HSA account, but now they have extra money they can deduct on their taxes and hopefully get a bigger return that essentially could replace some of that extra contribution they put in for the past year.
Yeah, that's a great point. And it's actually fascinating you talk about that because not only from a standpoint of saving taxes, but also from an HSA perspective, having that extra money that you can put into your HSA can then be invested, and you can leverage the power of compounding working to your advantage for the long run. So if you are thinking about HSAs, or if you haven't maxed out on your HSAs for whatever reason, whether you were not aware or you couldn't or what have you, you have until tax day, as you heard Mark say and us talk about, to maximize your contributions. If you haven't done through payroll, you can still do it outside of the payroll to do that and have that money go into your HSA, and make sure to invest those dollars so that you can really take advantage of how these programs are designed for. Cool. No, that's awesome. Well, we wanted to, any other questions that you have, Mimi, for us around HSAs and tax?
No other questions around HSAs and tax. We're good.
Awesome. Well, this is great. Very bite-sized, living up to what we are preaching others to make sure the information is short and very easily consumable. Again, reminder, contributions to HSAs are tax-free. Money that is in HSAs can be invested and grows tax-free. The money can be taken out for a qualified medical expense, tax-free. And employers and employees do not pay the FICA payroll tax for anything that's coming from payroll directly into the HSAs. And you have until this tax day, April 17th, 2022 this year, to be able to contribute and max out your HSAs for 2021.
Okay, thank you so much, guys. With that, we have wrapped up another edition of The Right Way to HSA. I want to thank everyone for tuning in. We are here every week on Wednesdays at 12 p.m. Pacific time on LinkedIn and Twitter. If you have any questions, please feel free to go to our website at savingsoak.com and click on the Contact Us button and ask us your questions, and one of our HSA specialists will get right back to you. Thank you so much.
All right. Thank you.
Thanks, Mimi.